Okay, for the Tuesday session, the Dow was down 76 points, down 0.17%. The S&P was flat, almost 3 points higher, 0.05%. The NASDAQ was up 0.4%. Russell was down nearly 0.75%, down almost 18 points. The VIX was down 0.30%, hovering just under 13.5. Now we're going to get that 9 count on the S&P tomorrow. If it is above the bar from 4 bars ago, we're also going to get it on NASDAQ. Watch the video all the way through, and I'll talk more about the NASDAQ after I finish with the S&P 500. Now, I had talked about the VIX forming a divergence. We're now seeing that happen, moving below this low right here. So again, the S&P is going to rise again into the 6,100 area, upper boundary of the rising wedge. I do think that we are forming a divergence here. Sometimes the VIX bottoms before the S&P tops, it tops before the S&P bottoms. Sometimes they do it simultaneously, but regardless, again, you've got divergences going on here now. So again, going to be close but no cigar for my target levels with the S&P. We reach those levels. My guess is we'll reach them. I think the time is short. Down at extremes, we could stay down here and still see the S&P go higher before we jump back up. Still have, even though we've seen the drop below the 50 period, we went up and we tested at the green line there and we turned off of it. Now we're forming the divergence of 50 is still above the 200 period moving average. It's very problematic for this rally. I told you we were going to go to new all-time highs. We were going to reach that mid-6,000 area. We did on Friday. I thought we'd overthrow it, probably move towards the 6,100 area. Still think that, but this is saying, hey, the time is short. Look at the Bollinger Band, how it's tightened up. This is saying, hey, something big is getting ready to happen. We had that over here, the Bollinger Band tightening up before we got a big surge and the sell-off off of the July peak. We're seeing the same thing here. That's when we get the 50 back above the 200 back over there, and it's remained over there, but suggesting a topping process. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please consider helping out by supporting the channel today. I don't have any sponsors, just a direct relationship with you. Follow the link below. It'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Take a moment, help them to the plate and help out. I would really, really appreciate it. Channels on YouTube make most of their money through sponsors. I choose not to have any because I don't want to sell you a bunch of stuff you don't need. You can Black Friday shop and Cyber Monday shop without me. So if you could take a moment to help out, I would really, really appreciate it. Important things going on with the NASDAQ. Watch the video all the way through. I'll talk about that after I talk about the S&P 500. Just want to review some target levels that I'm looking at in the daily and the weekly and the monthly. Hit that monthly trend line I'm talking about. I still think we're going to rise up to this trend line right here, the upper boundary, the rising wedge on the S&P daily. And I think that will slam us up into the upper channel line in the weekly time frame. So I do think we're going to overthrow, as I keep saying and have been saying. We ever reached the target last Friday, monthly trend line. I told you I thought we would end up overthrowing it, reaching this boundary here, reaching the boundary on the weekly time frame. If we take a look at this, again, we are getting an 8 of a 9, and by the way, we could get a 9 count completing by tomorrow here in the daily time frame. And again, you'll see these 9 counts have been very interesting. Again, we've gotten 9 counts, we've gone a little bit higher, and then we've seen these downturns. Again, when we reach the upper boundary here and the upper boundary on the weekly chart, I think those divergences in the weekly time frame will play out. Again, I've been for all-time highs on the S&P, continuing to call for more all-time highs on the S&P, even though reached the target on the monthly chart. I told you we haven't reached it on the weekly, and we could overthrow it and reach the target on the weekly chart into the 6,100, the low to mid to high 6,100 area. That's where I think we're headed. I think once we do that, I think it will stall. We could see that happen here in December. I'll show you some of these targets. Now, again, if we get the 9 count tomorrow, we could complete it, go a little bit higher, and still reach this area in the coming days ahead. We'll have a 13.9 if that happens. If we hit the upper boundary here sooner rather than later, again, we'll be in that low 6,100 area. If we hit it, if we take a little bit longer to hit it, then again, more of the mid 6100 area, and that high, we can go to the high 6100 area if we take our time reaching that. But this is where I think we're headed. You could get the 9 count, go a little bit higher, and then begin to turn. Here we turned with the 9 count. Here we went a little bit higher with it. Here we went a little bit higher with it. And it's just showing price exhaustion, and we got a 13 followed. If we get a 13 fall by a 9, that will be a reversal pattern. We have an 8 of a 9, and again, the upper boundary, should we reach it sooner rather than later, again, the low to mid 6100 area. We take our time. Again, it could higher. The further to the right of the chart you go, the higher the trend line goes. But this is a trend line I'm looking at in the daily time frame. Tomorrow we get the 9 count. I think there's a very good chance it completes and we go a little bit higher, and then we'll be watching. After we got the 9 count here, we went higher for a few more days. After we got the 9 count here, went higher for a couple more days. We'll probably see something similar to that. Again, if I bring this up close, we've had that 13 count down, reversal signal. We could get the 13 fall by the 9. Session is coming in the first quarter 2025 as suggested, or the very beginning of the second quarter in April. Again, we very well could see the market top a month or two before the recession hits, just like in 2007. It peaked in October. By the time we hit December, the recession showed up. So we'll be watching this area. We'll be watching the 9 count here. Will be complete a 13-9 full sequence count reversal signal. Again, zooming out. Again, this area right here is coming in near that area in the weekly time frame for the channel. If we hit the upper boundary, the rising wedge will be moving towards the upper boundary of the channel in the weekly time frame, overthrowing the monthly trend line. Here's the weekly chart on the S&P 500. And again, this trend line includes the shadow right here. If we exclude it, it's just a little bit lower. We rise immediately here in early December. We can reach this trend line again in the 6100 level. The further right we go to the chart over the next few weeks, it goes higher. I told you in the monthly time frame, the trend line in October was just below 6,000. In November, it was just above 6,000 at 6,040 to 50 area. Previous month, it was just right under 6,000. Trend lines rise the further right of the chart you go. That changes the target levels depending on how long it takes to reach that level. I talked about with the daily chart with the S&P 500's rising wedge a moment ago. If we reach this immediately, you're still looking at the 6,100 level. If we take a couple of weeks going into January, then again, it's going to move us into the 6,200 area. If we see this level reached, again, we're going to be overthrowing the trend line here in the monthly time frame with a push up to this trend line or the trend line in the weekly or in the daily time frame or rising wedge pattern. Now again, there's another trend line I'm watching from the 2024 highs right here, and that, if we slightly exclude the shadow here and connect it to this peak right here, we have it intersecting with the trend line there, again, right around the high 6,100 area. So just what I'm looking at here, as far as possible target levels, again, it may be close but no cigar. We may fall short of these levels, but I'm looking at this upper boundary trend line here in the weekly time frame. I'm looking at this upper boundary trend line on the daily chart here. And again, we may overthrow the upper boundary here if we do it immediately, which rising wedges, oftentimes you get that. You get an overthrow move into, again, the upper boundary of that channel line. So just some levels I'm looking at, 6,100 area, or like I said, again, the further right you go to the chart, then you go on into the 6,200 level. There's a high probability we're going to see this level reached here in December, January, but we know the recession is coming. So again, the market is going to peak before the recession hits. Could show up in that first quarter or quarter of 2025, or at the very beginning of the second quarter there in April. Then we have the trend line coming in from the 2023 low. Again, we bounced off of it. Here we broke it with the July sell-off, and then it's been acting as resistance ever since we had that July sell-off. That has been resistance here after being support over here. So again, that trend line coming in very close, upper weekly channel to the boundary of the rising wedge on the daily chart. So just some of these trend lines really showing a confluence of resistance, and that's why I keep saying I think that we'll again move above the trend line in the monthly time frame here and reach this 6100 area. And again, a very similar divergence to what we had back over here with the peak over here. Now that just gave us a correction earlier in the year. Again, this is likely going to give us a reversal. Trend lines of resistance I'm talking about. Similar divergences, multiple point divergences, longer term, again, from the July peak here on the MACD and here on the RSI. These trend lines, I just showed you from 2023, the upper boundary here of the rising wedge in the daily, the upper boundary here in the weekly time frame. That's going to likely have us decisively overthrow the monthly trend line, which again, long term from 1929, this is nearly a 100-year-old trend line. Reached it on Friday on that abbreviated trading session on Black Friday. Now if I zoom in, you can see we reached that with Friday's close, with closing out the month of November. We slammed right into it, pulled just slightly back off of it, but here we are right at it again. And as I've said, the further right you go to the chart, the higher the trend line goes. Here we are just slightly at the moment, slightly underneath it. Now I talked about overthrowing this area. Tag it there at that mid 6,000 area. This is again slightly higher in the high 6,000 area. Again, we could overthrow it a little bit, but not by as much as we needed to the previous month because we're here. But again, we could reach that weekly trend line, and if we do, we could slightly overthrow this trend line, get a decisive push above it. Here we tagged it and turned off of it. Here we could probably overthrow it just a bit again to reach that trend line in the weekly time frame. Because we've moved further along in the year, we've moved, this is the monthly, you get one bar per month. Again, the trend line goes slightly higher, and this is why I talked about being 6,000, but we could go to 6,100, the range, and overthrow it here, or again, possibly overthrow it a little bit here, or tag that level if we don't end up overthrowing it. But again, it's in the 6,100, that's in the 6,100 range. But this is this trend line right here, right now, is just a little bit under, that weekly trend line. So again, going to be looking to see if we overthrow this level, if we hit it, or again, no cigar in the weekly time frame. But I think that this 6,100 area is, again, where we're likely going to see prices stall, take our time hitting it in December. Again, we could go into the 6,200 level, just above this level, a little bit higher. This is the trend line I'm talking about. It's going to move as we move with time, but you could see that we're there. We haven't reached that weekly trend line yet. I think that we will. And the daily, the upper boundary of the rising wedge. We have the Fed meeting in about 2 weeks. About the Fed meetings being tops, bottoms, and continuations. The last Fed meeting was a continuation. Remember I talked about the S&P still moving to new all-time highs. It's lower end of the target at 5750. We've already reached that. The higher end of the target here was at that 6,040 area. We hit it. And again, I told you we can even overthrow it and go into the 6,100 level. Well, that goes just a little bit higher, possibly into 6,200 if we overthrow that here in the month of December, or if it drags out into January. But I think you got a good shot. You're going to try to reverse around this area. Sorry about that. I had to cough there for a second. I wanted to show you that up close and these target levels up close because, again, I talked about the 6,000 level of target being reached. We've now done that, but I've talked about overthrowing that. We need to talk about new all-time highs over and over to reach this trend line right here, which we've now done, and we're just underneath it. Now moved into the new month. I think the stock market will form an important top surrounding this area and eventually move back to this midpoint, or even as low as these peaks over here, 1520, 1550 and 1575. They were 25 points apart. But I think the midpoint and the pandemic low might serve as a place where I see a possible bottom, but I do think we're going to see a sell-off back to here or back to here, and then I think we'll get a new bull market that will set up a lower high and eventually take us back to this longer-term trend line down here. So again, in keeping with the valuations that are telling us, like the Buffett indicator being, above 200% right now, record highs, it would be in keeping valuations like the Buffett indicator that are telling us that returns are going to be low for the next decade, or they're going to be negative. You're going to get a crash or two, and this was over 13. You didn't start making new highs until 13 years later. Over here in the 60s and 70s, 16 and a half years later. Over here, after the peak in 29, you didn't make new highs until 25 years later. It has these long periods of drawdowns when you reach extremes with valuations, and that's what the Buffett indicator, the market cap to GDP, is what the Buffett indicator is. The market is extremely overvalued. So again, I think you got a really good shot of a top in this area. And again, as we're reaching this area, complacency is through the roof. Again, as I've been saying, we can overthrow this trend line a little bit and go a bit above it, as I've been saying. In November, that was the 6,100 area. Again, we could just go a little bit higher on it to 6,200. So keep that in mind. This trend line is rising. Just directly underneath it still, moving in our new month of December. A really good shot that in December or January, you're going to try to turn off of this. And if you don't get it in December or January, a high probability you're going to see it happen in the first quarter, because again, before the recession hits, the market will begin to price in the recession. Go top, it will begin to reverse. So the market takes its time doing what it's going to do. Then it creates a huge amount of complacency. People begin to believe, well, because it hasn't happened yet, it's not going to happen. We haven't seen a downturn in the market. We haven't seen a recession, and we have the Fed saying, hey, there's no rush to cut rates. They're saying we're going to get one more cut right now. Well, and then the Fed is possibly going to pause for several meetings. But yeah, I'll tell you this, the Fed's going to end up doing an emergency cut very soon, like they did in the other charts. Here's the S&P. Again, the rising wedge. We were up slightly today. These record closes, I think we hit that trend line and then come back down and break this rising trend line. Once we do that, we may pull back first. Negative divergences try to form here today on 2-minute chart, but regardless how we get there, I still think we get there. So all the signals begin to turn, and we see everything bearish and a reversal starts. We still have again this divergence looming over the daily chart. We still may see these signals still reach new extremes, possibly going above the November peak. So keep that in mind as well. S&P formed this rising wedge, and it broke down slightly and could be in backtest mode. We had the little divergence develop here on the MACD. It rolled over, but we're kind of going sideways. So again, one of the quirks about the MACD is if it does roll over, sometimes you go sideways. So we'll be watching if we get a bigger pullback. And if we do, let me repeat, I still think we're going to reach that upper boundary on the rising wedge in all likelihood. Again, told you about the sell-off over here. I thought that triangle might get an upward resolution. The target level on the monthly time frame, the triangle can break either way. It ended up breaking down, but I told you, even though it did break down, I told you again, we likely had bottom at key support. Remember, we hit our 50 period and support in the daily time frame, and I told you we were likely going to rally presidential election results. We did. I told you here we were forming these divergences, especially here on the 60-minute chart with the RSI, that we were going to get a pullback. We did. Then over here, I told you we were going to get a bigger sell-off because the signals turned bearish intraday. We did. And then I told you here, again, I thought we were going to bounce off the 200 period moving average, go back up to fill the gap, and make new all-time highs and reach the objective target, which we did last Friday, and we did. We've got this rising wedge. Again, trend line change, and we go higher and just cancel out the pattern and blow through the upper boundary, reaching boundary of the rising wedge on the daily, or does this give us a bigger pullback first? Regardless, I think that we're going to reach that level. But again, have this really SP divergence, almost equal peaks here. The MACD's got a Class A divergence here. Again, we're still in positive territory. Again, it could give us a bigger pullback before going higher, so do keep that in mind. We did form a rising wedge, and we did breach the trend line. Very, very light volume here. Watching to see how this unfolds. Daily signals still for the trend still bullish. The momentum signals had flipped back to bullish back over here. I talked about that. As we've had the rally up here, we've got another warning sign to, hey, be watching for a possible top. I think it's going to be closer to that trend line on the daily chart, that upper boundary of the rising wedge. And again, I think we'll end up forming a divergence here, which again could possibly be done if it's close but no cigar. But again, telling you what I think we're likely going to reach that level. We're going to get a possible 9 count tomorrow, completing on the S&P 500. Complete it, and then I think we'll overthrow that level and move towards the upper boundary of the trend line here, possibly ahead of the Fed meeting 2 weeks from tomorrow. Same thing here. We've seen NASDAQ reach new highs above the previous peak here. Again, likely carving out a divergence and probably not done yet. Probably going to reach that upper boundary of the NASDAQ. Momentum line is bullish. Again, we got the momentum flipping back to bullish. Trend signals remain bullish. We have these divergences in place here on a lot of indicators. The Awesome Oscillator, the MACD. Again, maybe we move to a new high, or maybe the divergences aren't done yet. So again, keep that in mind. We had our bounce off horizontal support and our 50 period. We talked about that at the time ahead of the election. I told you we were likely going to get an election rally. I think we still go higher. I think the time is short. Still think the S&P likely moves to new all-time highs. The trend lines I've talked about in this video. Same thing, we still have a bullish reversal of conditions for the NASDAQ as far as momentum. Again, my signals remain bullish. NASDAQ moved to new all-time highs. It was up 64, almost 65 points today, up 0.31%. Again, likely forming a divergence, likely moving to the upper channel, or I'm sorry, the upper trend line of the rising wedge. I think Nvidia has likely peaked, and as it's rising back up, I think, which right now it's back testing the broken trend line, I think it will further back test and straddle along this trend line and form a right shoulder here at the 144 to maybe as high as the 148 area if we try to fill the gap up here. But on a closing basis rather than an intraday basis, you got a shot at a head and shoulders here, and then to break down this other trend line, which we bounced off of after dropping 14% surrounding earnings. We popped a little higher, got the topping tail, the black reversal, topping tail shooting star, and it did get confirmation. Follow through a close below the confirmation bar. You're forming this sideways move. Again, this is turning off the major trend line of resistance for Nvidia, as I've talked about in yesterday's video and shared over the weekend as well. So NASDAQ daily chart, again, looking at this upper boundary, still moving to a new all-time high here on NASDAQ. I think we're likely going to reach this. I was watching to see if it would diverge with the S&P or if it'd go ahead and make new highs and possibly diverge with Nvidia. It looks like it might diverge with Nvidia. NASDAQ's making new highs, just like it did back in July, and Nvidia is not. So again, they could diverge like they had a divergence between the July and June peaks. Could see something similar to that here. NASDAQ moves above its previous peak, but Nvidia does not. Turned off a major trend line of resistance, and again, the channel, if it breaks, shorter term channel, firm the reversal off the longer term upper boundary channel, which I've talked about at great length and detail. So again, continuing to rally here, I guess, as we reach this upper boundary level, or again, if it take our time, a little bit of time to reach it. But again, just as the S&P is about to get a 9 count tomorrow to complete a 13-9 reversal, double sequence count reversal signal, we're about to get a 9 bar on NASDAQ tomorrow as well. The NASDAQ here has got the 8 bar today. We'll get a 9 bar, and again, could get the 9 bar, move a little bit higher towards that upper boundary as I've talked about. It rally a little bit in after hours, right after the close with earnings announcements. Be watching to see if we can rally back up. We'll have the jobs report on Friday. We'll have the inflation data, so we'll be watching all that, and then following week we'll have the Fed meeting. So again, going to be watching this 9 count very closely. This 9 count marked a top, and we sold off by nearly 16% here. We got the 9 count, we went a little bit higher, and then we sold off. Here we got the 13 count. We ended up going higher, filling the gap, and then pull back a little bit, but then got the trend extension. Zoom out a little bit. The top over here was a 9-9 reversal pattern. for the July top for NASDAQ. If we complete a 9 count here, you will have a 9-13-9. A 9-13-9 is also a reversal pattern. Again, with our rising wedge pattern, which again we bounced off of, hitting this trend line, we bounced off of it over here, but I think we'll likely reach that upper boundary. Even if we don't do it with the 9 count, you can go a little bit higher, as I've been talking about, but I think you got a good shot. We're going to reach that upper boundary. We're going to complete the 9 counts, and then shortly thereafter, we could start seeing some selling pressure. And if we break down from the rising wedge, we could see the reversal begin with the breakdown of these rising wedge patterns. Now, the S&P had a little divergence in the more recent price action on the MACD and the RSI. We didn't have that. But towards the end of the session, as we rallied back up, we got a little tiny divergence right there. But at the beginning of the session, that wasn't present. So again, we could see some kind of pullback. We're making new all-time highs. I still think we go higher. We'll be watching the 9 count. If we don't close below the bar from 4 bars ago, we can continue we can complete the 9 counts, but then we can even move above them and reach the upper boundary of the rising wedge on NASDAQ, which again, I think is highly probable. Maybe this just moves up to a new extreme right here. We'll see what happens if we keep going with the 9 count. We're trying to rally a little bit in after hours. We'll see what it looks like by tomorrow's close. The open